Okay, so let's talk about taxes in Nigeria, because some big changes are on the horizon. A brand new law, the Tax Administration Act of 2025, is set to completely overhaul the system, and trust me, it's going to affect pretty much everyone. Doesn't matter if you're an employee, a business owner, or even trading crypto, this is going to change how you deal with your taxes.
So what does it all mean for you? That's the real question, isn't it? In this explainer, we're going to cut through all the legal jargon, all the noise, and break down what you actually need to know about this new act. By the end, you'll get it. Your new rights, your new responsibilities, and how the game is about to change.
All right, so why the huge shakeup? Before we dive into the nitty-gritty, let's just zoom out for a second. To really understand what this law means, we first have to understand why it was created in the first place.
Right here, this is the official mission statement. And you've got to pay attention to a few key words: uniform, consistent, and efficient. In other words, the government wants to make the whole system simpler and fairer, so it's easier for you to pay the right amount and harder for people to slip through the cracks. It's a huge shift from the old system, which, let's be honest, could be confusing and full of loopholes.
So, to make sense of all this, we're going to walk you through what we're calling the taxpayer's journey. We'll start with the basics, like getting registered. Then we'll cover filing your returns, what you can do if you disagree with an assessment, and then the serious stuff, like penalties. And we'll wrap it all up with the rights that are there to protect you. Think of it as your roadmap.
All right, every journey has a first step, right? And for us, that's registration. At the very heart of this new system is one single, absolutely critical number: your taxpayer identification number, or your tax ID.
So who needs one of these? Well, the short answer is pretty much everybody. The new law defines a taxable person as broadly as possible. If you earn income in Nigeria, any income at all, you need a tax ID. It doesn't matter if you're a student with a side hustle, a massive company, or a foreign investor. If you're making money here, boom, you're on the radar.
And I want you to think of your tax ID like this. It's your financial passport. And no, that is not an exaggeration. Just like you can't get on a plane and fly internationally without a passport, you really can't operate in Nigeria's economy without a tax ID. You're going to need it for everything, from bank accounts to government contracts. It is the key.
Okay, so you've got your tax ID. Now what? Well, now comes the part where the rubber really meets the road: filing your tax returns. And believe me, this new law has some pretty big changes waiting for all of us here. Under the old way of doing things, a lot of people just waited for the government to send them a bill telling them what they owed. Well, let me tell you, those days are over. This new law is built on something called self-assessment, and that means the responsibility is now on you. You have to calculate what you owe and submit it on time. It's a huge mindset shift.
For the longest time, crypto in Nigeria was just this massive gray area, right? Nobody was quite sure how it fit into the tax system. Well, not anymore. The new law officially defines virtual assets. That means if you're making money from crypto, NFTs, or anything like that, you absolutely have to report it and pay your taxes on it. This is a game changer.
And let's get practical for a second. Deadlines. You got to know your deadlines. So, if you're an employer handling payee, you have until January 31st for the year that just ended. If you're a business dealing with that, you've got to file by the 21st of the next month. And for all those crypto and virtual asset providers, you're looking at monthly reports now. These deadlines are no joke.
So, you did everything right. You filed your return. Phew. But what happens if the tax authority looks at your numbers and says, we're not so sure about this? This brings us to the next and sometimes tricky part of the journey: assessments and objections. But the good news is, the new law gives you a clear path forward.
Okay, so let's imagine you get that email, that notice of assessment, saying you owe more tax than you thought. First thing, don't panic. The law gives you a formal process. You have exactly 30 days to send in a written objection. That kicks off an official review, and it's your chance to make your case and show your work.
Now, listen to this, because this is huge for taxpayers. Seriously. We've all heard stories of tax disputes just dragging on forever, lost in some pile of paperwork. Well, this new law puts a clock on it. The tax authority now has a strict 90-day deadline to respond to you. If they miss it, you win. Your objection stands. That is a powerful piece of protection.
The new law is also coming down hard on anyone trying to be a little too clever with their taxes. It's targeting two main things. First, artificial transactions. These are basically fake deals set up just to lower a tax bill. And second, prohibited arrangements, which are complicated loopholes that are now officially closed. If you get caught doing either, the taxman can basically just ignore the whole thing and charge you the full amount.
So far, we've talked about what you're supposed to do. But what happens if you don't? This is where the new law gets really, really serious. The 2025 Act gives the government some powerful new tools to make sure everyone pays up.
Let me just be direct here. This new law gives the tax authorities a level of power we haven't seen before. They now have broad powers to access your property, your books, and your records to make sure you're complying. It's a major shift in the balance of power, and it's something you definitely need to be aware of.
And look, this isn't just some abstract threat. What you're seeing on the screen right here, that's the actual warrant, straight out of the Act. The tax officers can use to enter your premises. This is a real legal document, and it's the clearest sign that the government is not playing around anymore when it comes to enforcement.
They've got a whole new toolkit now. They can use the power of substitution, which means they can literally tell your bank to pay your tax debt directly from your account. They have the power to distrain, which lets them seize and sell your assets, your car, your property, to cover what you owe. For some industries, they can even revoke your license to operate. The consequences are real.
Okay, I know. All this talk about enforcement and warrants can sound pretty intense, but it is so important to remember that this new law isn't just a bigger stick for the government. It's also meant to be a two-way street. So let's talk about the final, and most empowering, part of our journey, your rights.
The Act actually spells out your rights loud and clear. If you overpay, you have the right to get a refund. You have a right to confidentiality. Your financial life is private. You even have the right to ask for an advance ruling to get clarity on a complicated deal before you do it. And of course, you always have the right to object and appeal. This is your shield.
And here's another one of those magic numbers you need to remember: 90 days. We've all heard how frustrating it can be to get a tax refund. Well, just like with objections, the government now has a strict 90-day deadline to process your valid refund claim. That's a simple change, but it's going to make a huge difference for people waiting for their money.
So there you have it. When you boil it all down, the new Tax Administration Act is a really ambitious plan to drag Nigeria's tax system into the modern era. On paper, it promises to make things more efficient, more fair, and more profitable for the whole country. But the big question remains, is Nigeria ready to make it a reality? The answer will depend on both the government and on taxpayers like you and me. The future of the economy might just hang in the balance.